Electric car fires are increasing worldwide. More and more headlines are showing burning cars and exploding batteries. For car manufacturers, this is naturally becoming a billion-dollar problem. But what if there is a small company right here that could massively benefit from this safety crisis? KULR Technology is neither a car manufacturer nor a battery producer. They are specialists in battery safety and thermal management. This means that the company ultimately ensures that lithium-ion batteries do not overheat and do not catch fire. By the way, this exact problem is called thermal runaway. And in essence, that's a chain reaction inside the battery. In other words, if, for example, several cells overheat, it can spread to other cells, pulling them along. And that's exactly when explosions or fires occur. To prevent this, they ultimately develop special protection systems. These include, for example, heat-resistant materials, safety enclosures, or even complete battery designs. This technology was originally developed for space travel and for defense. Naturally, extremely high safety standards apply there. Today, KULR is truly transferring this know-how to e-batteries, electric car batteries, energy storage systems, but also to industrial applications. What makes it special is a combination of analyses, testing procedures, and their own protection technology. And they don't just sell a product, but offer a complete solution for lithium-ion batteries. And that's exactly why the company is also interesting, considering that battery fires are increasing worldwide. Because the stricter the safety requirements become, the more important specialized technologies also become. And this is exactly where the company positions itself. Before we get started together, grab yourself a relaxing coffee and leave a like for me. Let's move on to the first point, the market cap. They're not a micro cap, but compared to larger battery or car manufacturers, the company is definitely tiny. But that's exactly what makes such stocks extremely exciting, of course. Because small companies can obviously grow much more in percentage terms, but of course they're also significantly riskier, so you're not investing in stability but in potential. Next, key figure 2, the market position and competitive advantage. They come originally from the aerospace sector, which is of course exciting, and they have developed technologies for NASA as well as for defense. The safety requirements there are extremely high, and today they are transferring that know-how to lithium-ion batteries. That's a real technological advantage, but they are still quite small, it has to be said. Then what about scalability and future markets? E-cars, of course, energy storage, but also battery recycling, these are all in the end growth markets. In other words, if battery safety becomes mandatory, the business model can really scale quickly. The only question is whether they can grow fast enough to keep up with demand and problem solving. Battery fires are not a theoretical problem, they are real. And of course, they cost billions. Thermal runaway is truly a physical chain reaction. And this is exactly where they come in. They are solving a safety problem that cannot be ignored. So, what is the long-term growth strategy? At Landwerk, they are not building individual products, but rather a platform for battery safety. That is, design, testing, but also analysis and of course protection technologies. Strategically, that definitely makes sense, but it is still in development. So what is the strategy and what does the vision look like? The vision is clear: to create safe energy systems, so to speak, with fewer battery fires and greater efficiency. However, the company Landwerk is also involved in the area of recycling, or even in the topic of Bitcoin treasury. That of course makes the story even more complex. Now let's move on to the team, or rather to the management. The management comes from a technical background. That is definitely good for innovation, but investors of course also need operational excellence. And the company is still posting losses. That shows that execution still needs to be proven. So what about cash flow and the balance sheet? At the moment they're rather burning through cash, but that's typical for natural growth companies. But they are improving their balance sheet. Let me say, fewer liabilities and also more liquidity for the future is definitely a positive signal. So, how do they compare to the competition? Compared to the major battery manufacturers, they are of course tiny, but they are fully specialized. Large corporations of course have a broader setup. But here, they focus solely on safety. And that can be an important niche. By the way, if you want to see other analyses, check out the playlist, the 10x Universe. There you'll find more stock analyses, but also content in the crypto sector. So what about their debt situation? They primarily use equity capital. Their debt is still manageable. The problem isn't the amount of debt, but rather that they're not making a profit at the moment. So what about the stock's valuation? As mentioned, the company isn't profitable, so a classic PE ratio doesn't apply. It's not meaningful here. Investors here look at revenue and future potential. That makes the valuation rather speculative. What about the stock's liquidity? As a microcap, the stock is naturally volatile. Price movements can be really strong here, interesting for short-term traders, but more difficult for large investors. What about the free float? Most shares are freely tradable. That, of course, increases transparency, but also volatility. What about market strength? They have already gained recognition in the aerospace sector, but in the broader stock market, hardly at all yet. They are not one of the well-known brands, but that could change in the future. But currently, they are still a niche company. Then what about the business model? They offer hardware, engineering services, so to speak, and security solutions. The model makes sense, but it has not yet been proven that it can work on a large scale. Then what about insiders and the share structure? There are options and there is also dilution. But that's quite normal for microcaps. For investors, this means taking a close look. Then, what is the shareholder structure like? There are no dominant major holdings here, rather many small shareholders. Of course, this also increases market vulnerability. Then what about the community and also communication? They communicate through investor presentations and reports. There isn't a huge fan base. And now I'm interested in your opinion. Do you own the stock yourself, or do you know the product, or do you not know the company? Feel free to write it in the comments as well. Let's move on to sustainability. Battery safety and recycling, of course, fit perfectly with the ESG trend. Safe energy systems are a structural topic for the future. That is definitely positive in the long term. Then let's move on to the catalysts. What matters here are new orders, new partnerships, and of course, above all, increasing revenues. With microcaps, individual contracts can, of course, have an extremely large impact. They achieve 63.6% on my Zenix ranking list. That is more of a very speculative mid-range rating. So far, not a quality champion, but also not just a pure half value. They specialize in battery safety and thermal management, but are not yet making a profit. In other words, it is highly speculative, but the vision for the future is strong. The opportunities here clearly lie in the growth of e-mobility and stricter safety standards. The risk lies in the micro-cap structure, lack of profitability, and of course, the possibility of dilution. In other words, the stock is not a defensive investment, but rather a speculative bet on the future. Now let's take a look at the chart and move on to the mathematical price scenarios and forecasts up to 2030. Yes, let's jump straight into the chart analysis. So, at the moment it looks like here, this was in 2024, we obviously had a massive push upwards. That was extreme. If you look at it, that was almost a 23 times, about 2,300%. My indicator also signaled then a red dot because, let's say, it identified an overbought zone here. A lot of people bought here, it was overbought, it was a top formation red dot, and we went down. Then my indicator formed a green dot, which basically means that a lot of people sold and we might have a bottom forming. That's what happened. After the green dot formed, we went up a bit, about 67%, so pretty decent. But then we got sold off again here. At the moment we're more in the middle range here, so not oversold but also not overbought. Let me put it this way, I would still be cautious here for now. Personally, I only get in when we enter oversold zones, meaning when a bottom is forming. When that happens? In any case, let's take a look at the price scenarios. The bear scenario would be at 0.7 US dollars. From now, that would be about, I'd say, roughly minus 70%. But if we take a look at the base case now, that would be at $12.50. That would already be 300%, so that would be quite a substantial increase. The bull scenario would be above 22. Yeah, that would be about right. 6 times, 6.7 times. Of course, Vision 2030 looks completely different again. A lot can still happen by then. Then price ranges will be possible that are still unimaginable right now. In any case, I would personally wait for now until we reach oversold zones, and then maybe an interesting entry point will present itself. If you want to use my own indicator yourself, for your own stock analyses, but also for gold, silver, and even cryptocurrency. You can find it below in the video description, the link to it. If you're interested in more stock or cryptocurrency analyses, I've suggested an analysis here that is extremely exciting for the future market up to 2030. Click here. Enjoy the video and see you in the next one.